It's the week of May 25th, and before you place a single trade this week, you need to see what the chart is actually doing right now, because there's a very specific level, and that is going to decide where Bitcoin goes from here. Bitcoin is sitting at around $77,000 this morning, and it is right on the edge of the ascending channel. It has been trading in for 4 weeks now. The channel is still holding, but we are at the lower boundary of it, and that makes this one of the most important moments we've had in a while. This week either confirms that the trend is intact or it tells us something is breaking. There's no middle ground here. Okay, look at this. Price ran up beautifully inside the ascending channel, making higher highs, and then about 2 weeks ago it pulled back all the way to the lower boundary. That is where we are sitting right now, right on this line. Now the EMA above the price, you can see it's curving down. That's overhead resistance. So even if we get a bounce here, it's not going to be easy for buyers to push through that. But here's the thing, the channel is still intact. So the structure isn't broken yet. What we're watching is whether this level holds or fails. Nothing has shifted yet, but we are at the trigger point right now. The number I'm watching is approximately 76,800. That's the lower channel boundary. If we get a daily close below that on elevated volume, the channel breaks. And then we're looking at 73,700 as the real first target, and then 70,600 below that. On the other side, if buyers step in here and hold this level, the channel is alive, and 81,400 comes back into play on the upside. It's that simple. This one level decides the direction of the week. Let me walk you through the full map so you know exactly where the important levels are. On the upside, any bounce from here runs into $80,000 first, then 81,400 approximately according to the 200 EMA level. That's the first real wall. Above that, you've got 82,000 and the next resistance level of 83,700 approximately. A bounce that can't clear 81,400 isn't a recovery, it's just a short-term relief. Now look below, we are sitting at 77,000 and 76,800 is approximately the line that buyers are defending right now. If that breaks, and I mean a proper daily close below it, there's not a lot of structure between here and 73,700. The red line is the next major level, and below that, 70,600 approximately is where the bigger macro support sits. Lose both of those and the macro floor is $65,000. That's a long way down, which is exactly why the 76,800 matters so much this week. Now let's talk about who's actually in control, because the chart doesn't lie about this. Bitcoin ETFs bled 1.26 billion in outflows last week. That's the worst weekly outflow since late January. And the craziest part, BlackRock's IBT alone saw 448 million pulled in a single day. One day. That's not retail panic, that's institutional money walking out of the door. The derivative side, funding rates have been negative throughout April and the first half of May, which tells you that the majority of leveraged traders are positioned short. That keeps the pressure on, but it's also worth noting that it means there's a lot of fuel for a squeeze if the macro data surprises people on Thursday. And then there's the on-chain data. Exchange net flow has flipped positive. Coins are moving onto exchanges. When people move coins to exchanges, they're getting ready to sell. That's a bearish signal and it fits everything else we're seeing. Until buyers come in and flip this picture, I'm treating rallies as selling opportunities, not entries. Here's the bigger picture, because Bitcoin doesn't exist in a vacuum. Right now we got US inflation running near 4% annualized. That's double the Fed's target. The 10th-year Treasury yield is currently sitting at 4.55%, and that's the level of yield is putting sustained pressure on every risk asset out there, Bitcoin included. The market walked into 2026 expecting multiple rate cuts. Right now it's pricing in 0, and some desks are even starting to price in a hike. That's a complete reversal of the narrative that was driving risk assets higher. And the new Fed Chair Kevin Warsh, who took over on May 15th, his entire signal has been tighter policy, a leaner balance sheet, and no accommodation for markets. He's actively looking at selling Treasury bonds, which pushes yields even higher and puts more pressure on Bitcoin. It's a reflexive loop right now, and it's working against crypto. Higher yields push people into risk-off mode. Risk-off triggers ETF outflows. Outflows push Bitcoin lower. Lower prices weaken sentiment. Weaker sentiment triggers more outflows. This whole cycle doesn't break until the macro data changes. Now, one generally good piece of news, SpaceX revealed in their IPO filing that they're holding 18,712 Bitcoin on their balance sheet. That's 1.29 billion worth. They bought it at an average of $35,000 and haven't sold a single coin. One of the most valuable companies in the world is a long-term Bitcoin holder, and that matters for the structural story, even if it doesn't fix the short-term pressure we're dealing with right now. This is a heavy week on the macro calendar, and you need to be aware of what's coming. On Wednesday, FOMC minutes drop. These are the minutes from Jerome Powell's final meeting as Fed chair, and every word is going to be read for clues on what the rate path looks like under wash. Anything that reads hawkish hits markets instantly. Thursday is the key day this week. The main event to watch is the PCE inflation data at 8:30 a.m. Eastern, the Fed's preferred inflation gauge. If inflation comes in higher than expected, markets could dump and Bitcoin likely continues lower. If inflation comes in softer, that could trigger a relief rally and short squeeze back toward key resistance around $81,000. This ripple matters more than anything else this week. In the wild card, US-Iran tensions are still unresolved. Any escalation on Thursday morning before the PCE print drops will compound the downside significantly. Keep one eye on the news feed. My advice, don't put on big positions before Thursday. Wait for the data, react after, not before. So what's the overall read? The weight of the evidence is bearish. ETF outflows, hawkish Fed, negative funding, coins moving to exchanges. That's a lot of pressure sitting on this market. The higher probability scenario is that 76,800 fails on a daily close, and we start moving towards 73,700 here, and just keep going further down eventually to $70,600. The lower probability scenario is that PCE comes in soft on Thursday, sellers get squeezed, and price bounces back toward 81,400. That will keep the channel alive. I'll flip my view to bullish if we get a clean daily close above $82,000. Until then, any bounce is just a bounce, not a reversal. And if we close below 76,800 with conviction, that's the bearish confirmation, and 73,700 becomes the immediate target. Stay flexible, Thursday changes everything. Before you put on a single trade this week, I want you to go through this list. Do you have a defining validation before you enter? If not, you don't have a trade, you are just guessing. Is your risk capped at maximum 1% per trade? If you're still building your edge, keep it at 0.5%. 2 made trades or 2 losses in one single day, that's it. You're done for the day. Close the charts and don't make any exception. If your account is down 5% on the week, cut your risk in half the following week and review what happened. And don't go into Thursday's data with full-size positions. PCE prints create erratic moves, and you don't want to be oversized into that. Last thing, honestly check yourself before you sit down to trade. If you're frustrated, chasing a loss, or just bored, walk away. The market will be here tomorrow anyway. And quickly, one position sizing. Because this is the one thing that separates traders who survive from the ones who blow up. You take your account risk, let's say $100 on a 10,000 account at 1%, and you divide it by your stop distance. Stop is 200% away. That gives you a $5,000 position. That's it. Your conviction about the trade has zero input into that number. The math decides the size, not the feeling. Alright, that's your Bitcoin macro read for the week of May 25th. Channel intact but being tested at 76,800. Macro is heavy. Thursday PCE print is the catalyst. Bearish weight of evidence, but nothing is confirmed until that level breaks. Stay patient, size correctly, let the week come to you, don't force it.